Let's do a quick market health check here. A good way to get a feel for if you should be jumping into new trades right now is to look at the overall health of the market and where we are. So this is the S&P 500. Um, Recently had a correction. I was a little bit concerned that we might form a head and shoulders top and go way down, breaking below the cloud. Uh, we got some nice support here near the bottom of the cloud and the 100 moving average. And we bounced up, and I guess you could consider this a new high. It's not much of a new high, but it's enough that we definitely don't have a head and shoulders, and I don't really consider this as a double top because we haven't started going down yet, and also they're so close together here. Usually double tops come a little bit further apart and a little more pronounced than this. So I'm not too concerned about this, but I do feel we're going to pull back a little bit. We may go up for a few more days or not, but price does tend to want to come back and test the cloud. Right here you can see we stayed overextended for quite some time, and then we came down, we kind of tested the cloud and the 50 moving average here. We actually broke below the 50 moving average, which was a little bit of a panic signal. But you've got other uptrending indicators to help support you. Very last line of defense is usually the 200 moving average. Price goes below that and all hell breaks loose, just like we did here in the pandemic crash. Price broke below the 200 moving average. If you're a swing trader, daily close below the cloud is a signal to get out. If you're a long-term investor, I would maybe raise some cash, but we had no idea how far down this was going to go. It's easy to see when you look at history, but when you're in it and there's nothing but red and panic and the circuit breakers are going off because the market's falling so fast, yeah, it's hard to tell what to do when you're in that situation. For me, I got really lucky. I happened to be in cash when all this happened. And I bought down here after I saw we didn't make a new low right here. And I used this as a basis for entering some trades. And I've really gotten some nice trades out of this. I'm just staying long some good companies. So anyway, the market health looks pretty good. We're not crashing, but I am concerned about high momentum, what I call bubble stocks. I'll get to that in a minute. Let's look at the Dow. So I don't know why I got two candles here. Sometimes that's just kind of a glitch in my charts. So I'm not really, that's not really valid, that extra candle there. So the Dow made a new high. I would expect this to pull back some to continue a nice manageable trend. The further we get away from the cloud, the more at risk we are of another correction pullback. So just to have these nice gentle pullbacks is actually really healthy. The cloud's starting to get a little thin here because of all the momentum let's see, the cloud's getting thin because we have some kind of some consolidation here. Okay, this fast momentum is what's generated this thick cloud, is how it works. So the cloud is projected 26 time frames forward. So if you're on a daily chart, you're looking 26 days forward here. So the cloud kind of gives you a future prediction or future predictions of support. Okay, so this looks healthy. I would just expect maybe a little bit of a pullback. Not really a good time to add new positions depending on what you're looking at. You have to look at your charts and evaluate them individually. So NASDAQ composite, this is the one I've been the most concerned about because it's just crazy up. It's broken above a long-term rising channel. We're getting a bearish twist in the cloud here. Came down and found nice support at the 100 moving average, so that's encouraging. But now we've got some downtrending indicators here. We've had a TK cross right here. I changed the Tinkinson line to white, so hopefully people can see it a little bit better. I know it's tough if you're watching on a small device like a phone. Probably not going to see these things much at all. So we've got some downtrending indicators here, which is a little concerning. The bearish twist. Right here is the Kijinsen line. And you notice how we dropped below that, and then we reacted to it and went back down. And now we're right here again. We bounced above it, came down and kind of tested it, tried to go again, and then came back down and closed right here. So we're kind of sitting right on top of that Kijinsen line, and we're sitting right on top of the cloud. So I'd want to see price continue to trend above this cloud and above this Kijinsen line. If we go back down Monday or Tuesday, I would say there's a chance that this down move, this correction is not over. And then of course I'd look again for support at the 100 moving average and the bottom of the cloud. It takes time for these patterns to work out. These aren't just things don't just change in a day. It takes time. So I can see a little bit of a downtrending line forming here. Okay, well, depending on how you draw it, sometimes lines need to be redrawn, so maybe this is what will evolve with future price action. Or maybe not. Maybe we can take an approach from a bullish standpoint, and we'll make our lines this way. Okay, we are in an uptrend. It's a bull market. We're just getting a little extended here. People got all happy-go-lucky after the pandemic, and we saw a lot of retail investors come rushing in with their stimulus checks and their Robinhood apps. Real easy for these amateur investors to come rushing in, and a lot of them don't really know what they're doing, and they're just buy. And now we're way overextended. So I think that markets are at risk here, but if you're a long-term investor, I just hold. I'm holding a lot of technology stocks that are part of the NASDAQ composite, and like Apple and Google, and I think they're just good long-term investments, and I just hold them. I see a bit of a head and shoulders top here. You see it? Okay. We need to get back above this shoulder here, or that's just going to validate this. If we break down again here, that just validates this head and shoulders. It's not a big, well-pronounced head and shoulders, but it's a technical pattern that can be a factor here. Looking at the volatility index, VIX, recent correction. We really didn't have that big of a volatility spike compared to what we can do. You know, volatility is in basically a long-term downtrend. Here you see the COVID crash. Look at that volatility spike. Oh my gosh. I look at this when I was trading too, and I saw this long, thin cloud, as I've said before in my other videos, that this doesn't provide any support when you have a straight up thin cloud like that. So I saw price coming down towards this cloud, and I thought, this is going to be a buy opportunity. This is when I started buying stocks. Right in here represents that V-shaped bottom I pointed out on the S&P 500 or the Dow. And so this was my signal to start buying the market and look for price to continue trending underneath this volatility index cloud. So over the long term, volatility index has just been in a downtrend. That's, you know, we're in a bull market. So and looking at it here, we're getting kind of far from the cloud. So the further you get from the cloud, the more likely you are to pull back. Just for things to maintain equilibrium, at some point they want to come back and test the cloud. I don't pay too much attention to the Kijinsen and stuff here. We've got the Kijinsen coming down, Tenkan-sen right here. So we'd like to see price stay below those. price up above, and if the Tinkinson starts to curve up underneath the price, that could give us another volatility spike up to test the cloud. So trying to stay positive here, just pointing out what I see, that we're getting a little bit overextended here. So I mentioned bubble stocks, that stuff like NEO. This has been real popular with the market. I think that the recent correction did a lot of technical damage. Now we're below the cloud, and we have some downtrending indicators that are going to put downward pressure on this stock. So I really think it's not over for this. I think we're going to see this trend down and burn off. Quite often when you see a huge rally like this, a good 50% may burn off, and that would bring prices down to maybe $15 to $20. So I don't try to predict the future. I look at what the charts are telling me, okay? So I'm actually interested in shorting this right here. I would take a short sell trade and look for price to stay below this Tinkinson line. If I see a daily candle close above this, or this is a Kijinsen line, I'm sorry, the red Kijinsen line. See, Tinkinson stays tight to the price when you're trending, when you're in momentum. Price is staying below Tinkinson. Right here we broke above Tinkinson, okay? We don't want to see, if we're going to short sell this, we don't want to see a candle above the Kijinsen line, and we don't want to see Tinkinson start to curve up and support the price. And then the next thing we want to look at is the cloud. This nice flat bottom of the cloud is a good barrier of resistance now, and we have a downtrending red cloud. So the future is not bright for this price action right now. We would need to see, to go along this trade, I would need to see the price back above the cloud. I mean, that doesn't give you as much of a gain if you're bottom fishing. If you like to bottom fish, I would look for support on this 200 moving average. So another bounce down near the 200 moving average. We didn't quite get there. So nice long wick that kind of indicates a reversal. But with all this technical resistance, I really feel that this thing has some serious wood to chew if it's gonna make new highs. This double top here is pretty solid resistance right now too. So, and I'm seeing a lot of other what I call bubble stocks with charts that look like this. Excuse me. So I'm actually short this trade. I just opened this short trade Friday, I think it was, Thursday or Friday. And this is my stop out for the trade, is the bottom of this cloud. So this is the way I trade. I pick a technical point that the price is close to, that I like, that I think is firm. We have a downtrending Kijinsen line here to ultimately suppress the price. Cloud has formed a bearish twist. So actually what I'm looking for now is for price to break this 100 moving average. These moving averages are starting to roll over. See how they're not as steep as they were? They're starting to roll over. And we tested it here and bounced. Now, so we're trapped between support and resistance here. It's kind of we're kind of doing a ping pong ricochet thing here. So if price were to break below this 100 moving average, I would expect to see an accelerated move down to about the 200 moving average, which kind of comes in line with the flat bottom right here. You see that? This is support. See how price spent a bit of time right in here? This could be a little bit of support. See how we bounced right here? See that? We got a little bit of support right in this area because price spent a bit of time in this range before it pushed up and left that area. So this was kind of resistance. Price resisted here, got above it. So then this was support, which lines up just beautifully with that right here with the 100 period moving average. So a break in this, and this thing is going to tumble, in my opinion. Not trying to predict the future, but that's what the chart is telling me. Okay. Ichimoku can give you high probability trading. And these technicals don't always work, but placing a trade right here gives you a good point to limit your losses and maximize your gains. So I have potential gains this far, and I'm going to limit my losses this far. You see? So you don't even have to be right half the time with this strategy to have a winning strategy. The thing is to be very selective about your trades, be patient and wait for opportunities. So I actually had shorted this stock when it fell below, actually at the TK cross right here. I shorted this stock at the TK cross and I got a 30% return, and I saw this long pin right here, and then pre-market we had a bullish pre-market, and I closed the trade around in here, took profits, and then I wait and see. So I've actually reopened it based on this cloud right here. So I know a lot of retail traders are bullish on this stock, but if the smart money's looking at these technical patterns, like I said before, the smart money has more money than you do. And why is that? Because they're smart. Okay. Let's see what else we want to look at. I've already covered AMC the other day. So Gevo is kind of another bubble stock in my opinion. Still kind of looks strong, but we've got this Kijinsen line right here where we tested it, and the top of the cloud. So the top of the cloud is considered indecision. So when you're trading inside the cloud like this, price could go either way. I'm actually looking for a reaction down from the top of this cloud and the Kijinsen line, and then I have this long-term trend line that I drew on a 15-year chart. Look at that. Okay, I don't invest in charts that look like this. I trade them, because I would much rather invest in something that looks like Google or Facebook. That's just the opposite of that. You know, which one would you invest in, and which one would you rather trade? Okay. Let's see, that's Plug Power. Look what it's done. That is a huge move. That's typically not sustainable, just a straight up move like that. We've seen something like it here, and then look how long it just burned off for years. So I'm not in favor of calling this an investment and just averaging down, as they call it, and adding more and just piling in. I don't think that's wise at all right now with the way this chart looks. But you never know. The story for this stock is pretty bullish, and there's a lot of bullish retail investors piling into this. Let's see if they can keep it moving. Here's another one I'm shorting. Okay, indecision inside the cloud, resistance at the top of the cloud in here. I think, like I said, I think this correction has just done a lot of technical damage, and these stocks are in trouble, in my opinion. But we'll see. I mean, these things could push up. We see daily candle close back up here, and the Tinkinson curving up and wanting to cross again, then that would be very bullish. And then we need to just watch out for this top. That'd be resistance as well. So right now it could kind of go either way. We can bounce off here and come down, or so we'll see what kind of day we have Monday and Tuesday. If we have real strong bullish sentiment again, then this could break out. A daily candle close above the cloud is referred to as a Kumo breakout. I would want to see this responding, and of course this would respond and start coming up if we did that, and the cloud would begin to twist. Another thing I haven't talked about too much, but this line back here is called the lagging line. There's another name for it. What's it called? Let's see if I can bring it up here. I think it's in Chico span. No, yeah. Chico span, or it's also referred to as a lagging line. Now, to go long a trade, the rule is you want to see the lagging line above price. So I would want to see the lagging line up here above these candlesticks, and we're not. We're below the candlesticks. So this technically is not a good trade setup. This peak is just too steep. The lagging line is not going to be above that for quite some time. At some point, the lagging line is going to follow a price. So the lagging line here follows the price, but it lags behind by probably 26 time periods, I guess, the same as the cloud is projected forward. But you can see how the pattern kind of pretty much mimics a chart. So we would want to see this lagging line above the price to really have a good, a viable trade here. And I haven't talked about that enough. So part of your training there. I think that's all I'm going to look at for right now. If there's something you'd like to see in the videos, you can leave a comment, or if you know me personally and want to send me a message or something, and I'll try to get it on there for you. I try to look at current trending stocks and just the overall market health. And so, all right, I'll check you later.